Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today's Friday, August 28th. Hey, we got a bit of economic news to go over today, so we're going to jump right into it. We'll start off with the personal income for the month of July. So, as you can see, we're kind of the same path. Went up 0.4% back in June, and it continued that 0.4% in July, even though they had a forecast higher at 0.5%. So, a little disappointing to investor standpoint. Also, consumer spending, same thing, went up 0.3% in June and it went up 0.3% in July, even though they had a higher forecast for spending as well. On the other hand, we got the core inflation for July, and it went from 0.1% in June and went up to 0.1. I'm sorry, the forecast is 0.1 and it went up to 0.2%. But the problem is, if you look at year-over-year average, it went from 1.3 down to 1.2% year-over-year. So in the last 12 months, we only have 1.2% for core inflation, where the Fed wants to target to 2%, and that's creating some concern. We'll talk a little bit about that here in just a moment here. And last but not least, consumer sentiment. We had a 92.9 back in last reading, and forecast was at 93.5, and it actually went down to 91.9. So overall, not the greatest numbers here that we want to see. Obviously, inflation, we like to see it tame, but right now it's too low, and it's going the opposite direction. Stock market's down as a result of that. One of the big things that's going to be going on this weekend is the Fed will be meeting in Jackson Hole. They're meeting today as well as tomorrow, and Stanley Fischer will be one of the speakers discussing inflation tomorrow. And keep an eye on that one, because that's going to be a big deal. This is one of the reasons why they think the Fed may hold off from raising interest rates not only September but potentially the year, because interest rates or inflation seems to be too low, and now that commodity prices are even dipping further down, with China dropping the yuan and trying to stimulate their economy, as well as other emerging markets going to be doing the same thing. Our cost of goods will be even cheaper, so therefore inflation could even go the opposite direction. That could hurt us even further. So keep an eye on what they say over the weekend. That's going to be a big thing going over the weekend. Also, something to kind of little to note, but it's Venezuela has been requesting OPEC to try to create an emergency meeting, because investors kind of watching crude oil as to the prices, see where things go because of this. They're concerned, and a lot of the other smaller countries like Algeria and them are kind of concerned because of all the outflows of oil and the costs obviously being driven down further. But OPEC won't listen to an emergency meeting, because you got people like Russia, for example, that are not part of OPEC, who refuse to slow down their production. And basically they find it pointless to have an emergency meeting when you got people that are outside OPEC continuously that won't slow down their production. So this is keep an eye on. Keep an eye on this side, because who knows where gas prices. We've been seeing oil prices dipping down. We even saw it down as low as $39 a barrel. So that's kind of helping a lot of us consumers with our gas prices. But overall, it's kind of affecting. It could affect energy prices and maybe even jobs out there as well. Let's take a look at the bond markets. We're down for the day, but we are up over where we left off yesterday. It's been kind of fluctuating a little bit back and forth. We were even as good as 22 basis points above yesterday's. Right now we're been fluctuating between 6 and 12. It's been so far as I've been doing this, it's been fluctuating between 6 and 12 basis points higher than we left off. So what that basically translates is that we got a little better pricing for interest rates today compared to where we were yesterday. So again, keep an eye on that. We got the 25-day moving average kind of creeping upwards, which can drive us further up this range, as long as we stay above the 25-day moving average. But we've been having that 200-day moving average, that blue one. At some point, they're going to join, and it's going to push us one way or the other. So we could see rates dropping or going up pretty soon here, as they at some point will meet up and will be forced to make a decision one way or the other. All right, hey folks, you guys have a wonderful weekend. Thanks so much for watching. We'll see you guys on Monday. Take care. Bye.